Hello, everyone, and I would like to welcome to our new episode of Fintech Garden. And today I'm pleased to introduce Ayo Ojerinola, and he's from Nobo. He's a founder, and as we discussed on the previous episodes, T-shaped expert. He's playing several roles, and I would say orchestrating this business. And he has really great and deep experience in other fintech and banking spheres. So let's welcome, and maybe you will tell us what you're up to.
Thank you very much, Igor. And very nice to meet you in person.
Yeah, same for me.
So thanks for the great introduction. Founder and CEO of Nobo. Started this business about 2 years ago. From the ideation straight through to where we are now. Nobo is really a Web 2.5 platform. So we're bridging traditional financial services with what we see as the future of financial services. So Web 3 based financial services. So what that means in essence is we're building a neobank powered by blockchain rails. And a lot of drivers for this, or main drivers for these, are trying to help the mainstream adoption of Web3. So people that aren't necessarily familiar with Web3 can get the benefits of Web3 and blockchain technology via what looks like a Web 2.0 neobank, but also for the great application and the technology upgrading technology services in financial services. Sorry, so being able to use stablecoin rails for cross-border payments, being able to tap into DeFi for alternative sources of lending, so DeFi lending, and also preparing for the world of tokenization of real-world assets. So helping people get into investing in digital assets, liquidating digital assets, and doing all that on the same platform seamlessly with stablecoins as the settlement liquidity for digital assets. So yeah, in a nutshell, that's what we're doing at Nobo.
That brings the topic of this episode, stable coins. And today we will discuss maybe what is the difference between digital currencies. We already had this episode with Johnny Fry, so it's good extension. And another topic, because everyone is talking about stable coins as USDT. So I think we will highlight the difference between currencies and how they bake in the stable coin. So that's a good point. So maybe let's start. And I'm usually starting with the definitions because certain people might not heard or use stable coins. So what is it?
Yeah. So there's so many terms going around, and everyone seems to like to use different terms. But the main terms, I think, with digital currency is sort of the umbrella. Because stablecoins are a currency. Any sort of digital form of currency in this sort of topic relating to that's based on distributed ledger technology or blockchain technology, because you could argue, e-money could be digital currency, but we're talking about DLT blockchain-based currencies. So you could have anything from CBDCs that are based on blockchain, which is one of the main things, but they're not really being adopted at the moment. There's still a lot of regulatory discussions around those. And then tokenized deposits, that's more bank money, tokenized bank digital currency. And then you have things like stable coins. Then you could have fiat-backed or asset-backed. But I think the stable coins that really hit the headlines at the moment that everyone's sort of really excited about in 2025, fiat-backed stable coins. And in particular, like you mentioned, USD backed stable.
And I'm always trying to dig into the things to understand because when the technology as a blockchain appeared on the market, there was a lot of different currencies which were not baked by fiat. So why do you think what were the reason to bake the crypto, which by nature and by design should not be connected to the fiat money? Why right now there is a fusion as a stable coins?
The real driver for that and what really puts stable coins on the map is in the name. The proof is in the name. So they're stable, or they should be stable by design. Fiat-backed stablecoins definitely stable. So fiat-backed stablecoin is pegged 1-to-1 to the underlying currency. So USD stablecoin means USD-backed stablecoin means you have to give someone $1 and they give you a stablecoin token in return. So if the reserves are kept in order, you should never run into a situation where that stablecoin is depegged, theoretically, right? Of course, the stablecoins then trade on exchanges, and if some sort of market incident happens, could be depegged, but that's a different conversation. what the main driver for stablecoins and really put them on the map is volatility of crypto assets that were originally being traded.
Yeah.
And the use case that got adopted in the industry was whenever there was volatility being experienced, markets were having issues, people trading in cryptos would come out of those assets
Yeah.
into stable coins so they could stay in
Yeah.
the ecosystem ready to go back in
Yeah.
when the conditions were more favorable to buy digital assets. So that sort of became the de facto play. And so the liquidity
Yeah.
in the whole system was ended up being dollar-backed stablecoins. So USDT and USDC are the big market holders now.
And really good question. I think from this, we're talking about USDT. What other stable coins you think is the same like a size as USDT on the market? And if no, why so?
USDT is incredibly dominant. I think dollar-backed stablecoins to start with are dominant as the statistics are quite scary. I think in normal FX markets, dollar dominance is about 55%, 57%. In UK, the GBP is in the 30%, right?
Yeah.
And then there's everybody else. But in stablecoin
Yeah.
world, at the moment, it's 99% dollar dominated.
Yeah.
And within that split, I think it's something like USDT with 70% and USDC with 30%. So USDC are doing well and getting some advantages now with Mika. They have the Euro C, which is Mika compliant, and they have better reputation for validation of their reserves and for being regulatory friendly. Whereas USDT just they have the lion's share in the market. They are the go-to US dollar backed stablecoin. But I think they're now pulling out of Europe because they don't want to be MiCA compliant because of some of the restrictive legislation that's come out of MiCA. Where it's going to go in the future, no one knows. But at the
Yeah.
moment, USDT is definitely the big player in the space.
And do you think is there the space for other like fiat currencies to become another like stable coins? And if yes, what are the parameters for being like that?
Yeah, I think there definitely is a case for bringing balance into that market, stablecoin market, because having just the dollars as a de facto is great. No issues with USD backed stablecoins. Dollar is, after all, the reserve currency of the world. But as with any market, you need options, you need
Yeah.
balance, and I think the main driver for that will be digital currencies continue to grow and continue to be adopted in society. People will find that there's more use cases where they need their their digital currencies to be backed by their local currency. So, for instance, in your local capital markets, if you don't want to become heavily dollarized, you probably want to have the liquidity for digital assets in your local capital markets backed or settled over your local currency. So, a digital version of your local currency. Likewise, in sort of day-to-day transactions, microtransactions, local transactions, domestic transactions would probably be better in a locally denominated stable coin. So people in the market, people working with microfinance in different countries, in different markets, in emerging markets, may not necessarily have the facilities to process dollars or may not want to use dollars. And definitely, I think governments will have something to say about um, whether they want everyone transacting in their locally denominated currency or whether they're happy with everyone to transacting.
Okay, it totally makes sense. And maybe to understand, like you were mentioned local transactions or microtransactions. And right now, I would say it's not enough space, so I cannot go and buy coffee with stablecoin.
Mm.
What do you think will happen or should happen to make it possible?
That's a great question. So I think the original idea that was coming out of governments was CBDC. And I think once everyone started digging into it, the complexities of executing a retail CBDC started to come to light. And that doesn't seem to be, you know, as favorable a solution. I think this is another thing that really helps stablecoins. So at the moment, you can't because that mass adoption is not there.
Yeah.
I mean, there is mass adoption, but it's not.
But the usage is different. Usage from what
Yeah,
we have on the
yeah,
ground. So
exactly. And it's, I can segue this nicely into what we do at Novo because that Web 2.5 bridge that we're
yeah.
building is for exactly this reason. You've got great adoption of stablecoins for people within fintech, for people that understand blockchain, DLT, Web3,
Hmm.
right? But the mass people who don't really understand Web3 or blockchain or DLT, whatever you want to call it. People like I always use my mom as an analogy. She's never going to go to a Coinbase or a Uniswap
Hmm.
to buy stable coins and
Hmm.
run her own non-custodial wallet and
Yeah.
store her seeds somewhere safely. It's too complicated, right? People need to have that steep learning curve abstracted, right? If you think of a Web 2.0 banking app, Halifax, HSBC, even Monzo,
Yeah.
right? People know how to use that. Anyone
Yeah.
can use that. It's the UX is great. It's user intuitive,
Hmm.
and there's no onus on the user to understand
Hmm.
what happens in the back of a bank, how a core
Hmm.
banking system works. You don't need to log on to a server. You don't need to maintain your bank account yourself,
Yeah.
right? The application does it for you. All you see in the UX is, I would like to move money from A to B. I would like to buy something. I'd like to invest in something. And it's just a simple interface. Blockchain-based technology at the moment has this layer of complexity where uh, it's so open, it's great. You own everything, but there's that steep learning curve, there's
Yeah.
that complexity, and I think that puts off a lot of people for the mass adoption. So we're really trying to create a platform where people can just jump on, not know how blockchain works or how Web3 works or how to run a Web3 wallet, and we will take care of that in the background so they can get the benefits of that technology back upgrade in the background, but still transact with their money in a
Mhm.
nice, simple, easy UX way like they normally would.
Actually, it brings an analogy. I'm not sure that if it corrects, but
Mm,
let's try it. So it sounds like the difference between open source software or operation systems and proprietary. Like if
mm,
you have Mac OS or Windows, you don't know what is happening behind whatever you see. So you have the interface, and then there are systems like Linux, and that's why I kind of recall it because
yeah,
it's kind of the same. Is
yeah,
if you are enthusiast into the Unix systems or Linux,
yeah,
you can go, you can download sources, you can build it the way you want it, cook
yeah,
it. And kind of there is a learning curve which requires you to have a knowledge with the technology or computer science to make it possible.
yeah,
And that's a history already for, I don't know, decades. Like Unix systems are coming from 60s.
mm,
And there is still the difference between people who are professionally baked to use those systems against the users. I just want my laptop to be open and then I continue to work on, I don't know, my essay or writing the task for the engineers in my Jira tickets. So how you approaching at Nobo, how
mm,
you will affect the market by keeping this open source
yeah.
possibility to see what is happening behind the UI, but also giving this user interface and easy to use for the end customer.
Yeah, that's a great question again, and really on the point. Great analogy. I know someone that still uses, Debian Linux mail client
Yeah.
just because he doesn't want to get into using,
Yeah.
anything that he doesn't have full control of,
Yeah.
right? So there will always be people like that. There will always be people that want full access, which is great, and which is why we all like this technology because it gives ownership, right, to the user. There's always be people that love cash and don't want to have a transactional trail or anything like that. People that want privacy, right? And then there's always people that are not so technologically savvy, and we can't expect everyone to all of a sudden overnight become a technology whiz, right? I have a computer science degree. I got into blockchain in 2016, and it took me a while to wrap my head around blockchain. So I very quickly realized that there's people that are not as technologically savvy as
Mhm.
ourselves, that will just never get into blockchain, or not even that they're not capable of understanding, but that initial fear just is just off-putting, right?
Yeah.
For some people.
And I would say complexity. It's not even
Yeah,
about the fare, but putting the amount of resources to get up to the speed and
yeah,
running
yeah.
everything.
And I think there's even two layers, because even for my whole experience was getting over the complexity at first, wrap my head around it. Then there was even an element of fear the first time I used it, the first time I put money into it. It's how do I know I'm not gonna select the wrong network protocol when I'm sending money and it's going to disappear into the void? How do I know that I'm not investing in a scam? There's so many layers
Yeah.
that we really need to work at abstracting to put confidence into this technology for the mainstream. Everyone in our space has understood it and understands the benefits and wants to use it. But how do we get people that are not in this space, that are not talking about this every day or reading about this every day, they don't understand? So for me, I think it's what we're trying to do is starting with this hybrid approach where you're not giving people too much at once, right? And like I said, giving people options. So one of the things we're trying to do on our platform is to have the option of custodial and non-custodial wallets.
Okay.
So the people that understand what they're doing and want to run with it, you can select the non-custodial option on our platform and do it that way. But for people that want to get the benefits of it, faster, cheaper, more secure transactions, but don't necessarily understand how to use it, we can give you a custodial wallet and we'll run all that in the background for you. You don't have to think. So I think that's the way you get stablecoin payments into a coffee shop.
Maybe to explain the difference between custodian and non-custodian wallets to our listeners, like what is the difference in simple terms?
Yeah. So in simple terms, custodial is you don't have to run the wallet. You don't have to keep the keys. You don't have to custody your assets yourself.
Yeah.
So what that basically means is you just sign up and the wallet's there for you to use. You can run transactions through the wallet. You don't have to do any of the managing of the wallet, right? Non-custodial is the opposite. You get the wallet, but you have to manage your keys. You have to manage the wallet yourself. You're responsible for that wallet. The real difference at the heart of the discussion is the way people would put it is you don't actually own the assets if you don't own the keys. So that's a well-known phrase in the world of Web3 and blockchain. So are you comfortable with the platform that is taking custody of your assets? That is a secure platform and it's a trustworthy platform. If you are, then don't need to go through the headache of trying to protect your asset and your keys. It's essentially what a bank does. And I love to use the analogy as well that there's nothing in the DeFi world that hasn't really already been done in TradFi. So people say, oh, but it's not secure. I might get robbed or I might lose my keys. Someone might freeze my accounts. They might freeze my wallet. All these things could happen in TradFi. Your bank could freeze your accounts. Your bank could get hacked. There could be a data hack. You could be victim of a scam, right? Same thing can happen in DeFi, right? Your DeFi wallet could get hacked. You could get robbed. There's the $5 wrench joke as well. There's all sorts of things that can happen, but it's nothing new. So I think transitioning from the Web 2.0 to Web 3 is really just a technology upgrade. I think once people understand that, then that should alleviate some of the fears and help with the adoption.
Maybe another analogy. Sorry, I'm thinking about like comparing the objects. It comes into the mind the difference between Gmail accounts and self-hosted emails. Like in this case, imagine a custody wallet is something as a server. You spin up your own domain and then you're configuring your email client and email server to receive emails and send the emails. So basically, you own the whole process end to end, and you are able to control the passwords, whatever accounts you have on domain, etc., etc. And then you have like platforms as a Gmail when you trust basically the platform to have everything under the hood the way they want, but you are easy to use and navigate. Like in few clicks, you are just registering the Gmail account and then it's ready and you can run it.
That's exactly it, right? Just simplicity, simple UX. You either want something that you can run completely yourself, an Android phone, or you want an iPhone. It's great UX, it looks great. Maybe the functionality is a bit more limited. That's the trade-off, right?
Okay, so we have the onboarding. And how do you think, as we originally came from the question, how in regular life, like people like your ma will use the product? So one way is to make much more easier and digestible onboarding for the customer. But then how do I pay for the coffee?
How do you pay for the coffee?
Yeah.
Yes, of course. So first of all, the regulatory landscape needs to be agreeable, right?
Yeah.
Which is
Yeah.
now, we can see that's happening
Yeah.
now. Secondly, abstracted complexity.
Yeah.
So everyday people can use it. Great. And then there's, the payment leg, the POS systems. We need to build this infrastructure to allow people to make these payments, right? So okay, at the moment, POS systems tend to run with, card networks, MasterCard, your Visa. Account-to-account payments are on the rise,
Yeah.
right? If you think wallet to wallet is quite similar to account to
Yeah.
account, how do you create a POS system that can allow you to make crypto payments and receive crypto
Mhm.
payments? And there's a lot of players in the industry that are doing that now and
Mhm.
providing these services and working on that, with ourselves included. But this is really down to the adoption, right?
Mhm.
It's not been heavily adopted yet, but I think the more people start to appreciate the benefits of using things like stablecoins or cryptos for payments, the more you'll see that adoption, and then these infrastructures will start to pop up and become the norm. So
Yeah.
the
Yeah.
crypto pauses will become the norm. But if you think cutting out the middleman, not
Yeah.
having acquiring, issuing fees,
Mhm.
uh, makes it a lot cheaper for the merchant,
Yeah.
they may be able to pass on some of those cost savings to the customer.
Yeah.
All of a sudden, when the customer sees, oh, I can get 10% off by doing this,
Mhm.
because the merchant doesn't want to have to pay these fees,
Yeah.
then people might start to select that option over paying on traditional fiat and card rails.
And the adoption will be faster. And recently, I've been to Stripe sessions, and it was officially announced that Stripe is adding stablecoin to Stripe Connect,
Yeah.
and they acquired Bridge.
Yeah.
So, what do you think? Why at this particular moment it happened?
Yeah.
Not before. And actually, on the event, another maybe to add to the question, there were Mark Zuckerberg,
Mm.
and there was a big, really big discussion, and the Libra was highlighted
Yeah.
because Facebook actually did the stablecoin over 4 years ago,
Mm.
and at some point they had to close the project because
Yeah.
it didn't fly.
Yeah.
So, what do you think is different nowadays? We're in 2025,
Yeah.
and it seems that everyone in stablecoins and Stripe is announcing this stablecoin bridge
Yeah.
product in their platform. So, what is the difference?
Yeah, the M&As coming out are amazing. Some huge M&As being completed this year. I've been very vocal about this on LinkedIn. It's 2025, the year for stablecoins. So back to the genesis of it, definitely Libra was an early pioneer. Uh, didn't go well, and I think that was really down to the incumbent and the regulators not being ready. And that's the main driver for all this, right? Fast forward a few years, they're now ready. Mark Zuckerberg seems to want to come back into the fray. He has a platform for it, but everyone else has already realized, and this is the driver for Stripe. Everyone's realized that it's almost like a gold rush now. It's the digital currency infrastructure and digital
Yeah.
currency rush now. So who's going to get in and capture a big share of the market? Everyone's seen how well USDT's done doing that. USDT's, their numbers are incredible as well. I saw some stats. They're one of the best performing companies in the world per employee, right?
Yeah.
And they had that early mover advantage. So Stripe has obviously seen, why take the technological risk of trying to build out your own thing? We can just go and buy Bridge, right? Huge M&A, was a $1 billion acquisition. Very quickly after that, MoonPay's gone in.
Yeah.
Iron, yeah, you're brand new, but you've got the infrastructure we need. We're competing. Let's get in. So I think you're going to see a lot more of that this year as well. But that's definitely the reason. Everyone wants to get into this market because they can see what the future is. BlackRock, Larry Fink,
Yeah.
wax lyrical about tokenization. All the fund managers, they're all
Mhm.
buying into tokenization of real world assets, stable coins, currently on-chain liquidity and on-chain settlement for
Mhm.
for digital assets. So it makes sense if you're in the payment space, to get onto stablecoin rails. Yeah. So I think that's why we're seeing that this year. Donald Trump's come out and said we want America and USD-backed stablecoins to be number one in the world. Europe's come out with Mika and also with the the euro, digital euro,
Yeah.
right? MENA region, they're so good in this space at the moment, very open, very good regulations around stable coins, but also around tokenization. So they're miles ahead of us at the moment. Singapore in Asia as well, they're also in a good space in that sense. So there's a real gold rush for everyone to carve out their piece of the market, I think, this year and next year. So that's why you're seeing these mergers and acquisitions coming all of a sudden.
Okay, okay, it explained a lot. And what are the challenges that you think still exist? Like we see this inspiring acquisitions, mergers, adoption to the market, but like what are the challenges in the road ahead?
I think okay, the leading up to this, the challenges was regulatory clarity, right?
Yeah,
Um, and yeah, everyone's been sort of watching who's doing what and how they do
yeah,
it. And like I said, I think in the east and in the MENA region, they sort of went first and got good
yeah.
results, right? And then Mika sort of came out, and now the US are pushing. And unfortunately, I think the UK has been a bit slow. So challenges in the UK is the lack of regulatory clarity previously,
Yeah.
which now seems to be picking up. So thankfully, I think now that the US is moving really quickly, the UK are very close and allied with the US and trying
Hmm.
to um, ensure that we have a great trade relationship with with the US, seem to have picked up the pace.
Hmm.
But yeah, challenges will still be around how that regulatory guidance evolves over time and what sort of limitations that places on what you can and can't do with stable coins, with digital currencies at the moment. So I think while the teething issues around the new regulations are still being worked out, there'll still be some challenges, but hopefully over the next few years that will organically fix itself and we'll all be in a good space.
Okay, okay, that makes sense. And like it, it seems that this technology enables certain business cases which were harder before, like cross-border transfers. Because if we talk about the fiat, you should have a Swift transfer or like a specialized fintechs as Wise, which are overcoming. They're not using Swift. They're using basically different pockets in different countries.
Hmm.
So, do you see any other prominent use cases for the stablecoin across the globe or a specific industry that might be beneficial with this adoption rate from regulators and wider usage of the stablecoin?
There's so many use cases, infinite use cases, right?
Name, I don't know, two top two
Yeah.
or three.
So for us, again, I'll do a Nobo plug here.
Yeah, yeah, that's exactly
It's
what we hear.
stablecoin for cross-border payments for sure. That's our
Yeah,
MVP.
yeah.
TransferWise was a big inspiration for us. Like I said, my background's working in this space, and correspondent banking was well overdue an upgrade. TransferWise's model, though, still relies on pre-funded accounts,
Yeah.
and there's some stats out about I think $3 trillion tied up in pre-funded accounts annually. So that's a lot of capital that could be used that can't be used because it's
Yeah.
tied up in pre-funding. So treasury management is going to be a big one for B2B.
Hmm.
Being able to use stablecoins for real-time transfer of value without needing that pre-funding is a big deal. Then there's also DeFi, so DeFi lending, investing in digital assets. The way BlackRock is moving, everyone's
Hmm.
going to follow suit.
Hmm.
I heard someone talk recently talking about two UK funds
Hmm.
that moved some of their operations to Luxembourg so they could take advantage of the favorable regulatory jurisdiction there.
Hmm.
And they were able to reduce the entry to these funds, which were originally at £1 million minimum entry,
Hmm.
to £1,000. So that is such a big advantage for capital markets, right?
Hmm.
You've gone from having a very select pool of people that have £1 million disposable income
Yeah.
to just democratizing that access and thereby exponentially increasing the liquidity you can get
Yeah.
into that fund because every other person that earns a good living can afford to put £1,000 into this fund all of a sudden, right?
Hmm.
So that's another big advantage is that reduction in the cost of things So operational costs in financial services will come down because stablecoin rails are a lot cheaper and a lot faster, reducing that barrier to entry and thereby increasing liquidity in capital markets be a big factor. But also, yeah, cross border, like we said, trade finance. Someone was talking to me about a trade finance solution just before I came here, actually. That's going to be huge as well. So lots of savings to be had for technology that's actually cheaper to maintain and run. It's a win-win.
Okay, okay, it makes sense. So we covered several cases. I think today we will not go deep into that, but it kind of gives the good overview what is potential use. So thank you for that. And since we running out of the time, so maybe to sum up the episode, what do you think our listeners should keep an eye on to make sure that they have a proper exposure what is happening in the stable coins? Like, what are your suggestion? What you need to read or to learn or keep an eye on?
I think definitely watch this podcast.
Okay,
That's one
thank you.
thing you can get some great insights on. There's a lot of people in the industry. It's a very open, welcoming industry. That's one thing I have to say. And there's a lot of people happy to share lots of information online. So there's great newsletters, podcasts. Just following the right people on LinkedIn, you'll get so much information from policy to technology to everything, right? So I think it's not difficult. It's becoming a lot easier to find information in this space. There's people setting up web pages tracking stablecoin activity.
Yeah.
So if you want to get technical, you can actually see what's happening in the markets. But for everyday readers, I would say just pick a podcast and sign up to a newsletter and just get your daily digest that way.
Okay, it makes sense. And then I would like to thank you for finding the time joining our episode.
You're welcome.
And to our listeners, please subscribe, join our YouTube channel, where we have a LinkedIn group. And we always welcome the discussion. So you can drop your questions there to the episode or like that. So thank you for watching, and thank you everyone for joining this episode. Thank you, Ayo.
Yes, thanks for having me.